To find out where the best investing opportunities are now in Latin America, I sat down with Heiner Skaliks, portfolio manager for the Strategic Latin America Fund, who is based on the ground in Bolivia. Here's what he had to say. Tell me a little bit about what you're seeing in the different economies in the different countries. For instance, how is the region being affected by a weaker U.S. economy and a weak European economy?
We ran some numbers between the correlation of Strategic Latin America Fund and the markets in the U.S. and the markets in Europe. And what we came up with was less than one-to-one correlation, meaning that even though there is an interplay between those markets, it's not one-to-one. Fortunately, the European crisis has not had a direct impact on Latin America, but it has affected the flows of foreign direct investment somewhat.
Building on your point of foreign direct investment, do you believe monetary policies in the U.S. and Europe have caused growth to slow in certain economies in Latin America?
I think that many central banks in Latin America are starting to deploy monetary policy and fiscal policy, one, to fend off inflation fears, and two, to use that as a catalyst for economic growth. They still have wiggle room with the base interest rate, for example. That's not the case here in the U.S. And the levels of debt, unlike the U.S. and the European market, are somewhat lower. We find very sound macroeconomic indicators across Latin America.
So Latin American markets had a very strong first quarter. They were up 14%, even outpacing Asia, which was 13%. But have shares moved too high too quickly?
That's right. The first quarter was a pleasant surprise. We think that it was a strong rebound from last year. However, the rate and the time frame in which they did so has created a little bit of concern for us. And that is one of the reasons why we are starting to shift more towards fixed income over equities. Strategic Latin America Fund has the ability to and the flexibility to allocate between both fixed income and equity, and we're transitioning into fixed income for the remainder of the year.
If you were to see a measurable impact on the equity side, would you be buying?
Meaning a correction, or meaning perhaps a slight flattening or a fair valuation? Yes, we would. I think any time that you have the equity market growing so fast and in such a short period of time, when the problems have not necessarily been addressed or there is a clear solution and a clear roadmap, that is of concern.
So talk to me about where you're finding opportunities now. Which countries?
I will give you the economist answer. It depends. It depends if you're looking at the equity space or if you're looking at the fixed income space.
Let's talk about equities.
Equities, for the equity market, we're favoring Mexico, we are favoring Colombia, and we are favoring Peru.
Really, you're favoring Mexico, even though the market's already come back from the '08 losses. I know corporate earnings have been strong, and it's somewhat insulated from Europe, but valuations still aren't too expensive there for you?
They are not too expensive for two reasons. First, for the peso, the Mexican peso is at a point where we think is attractive. And we're also considering the fact that any significant growth from the U.S. or recovery from the U.S. will have a direct spillover into the Mexican economy. What we're also seeing is that many Mexican companies that are headquartered there are starting to deploy regional strategies, so there's still room for growth. On the Colombian side, it is the country with the most significant flow of foreign direct investment, and they also well endowed with natural resources, and they have very sound macroeconomic, monetary, and fiscal policies in place.
What about Brazil? Are you bullish or bearish? Clearly, 2011 was a tough year for Brazil. 2012 is off to a little bit of a better start, but given that China, Brazil's largest trading partner, sees growth slowing to 7.5% from 8%, what does that mean for Brazil and Brazilian stocks?
Whenever we talk with Brazilian business people, they always say, if you want to invest in China, invest in Brazil. And our outlook for Brazil is as follows. They still have a very high base rate, which is the Selic rate, at 9.25. And we think that the fixed income space is more attractive in Brazil because of that high base rate, especially in U.S. dollars, thereby foregoing any foreign exchange fluctuations that you might have. The equity space, we think, is a little overpriced because the real still has some room for devaluation, and we don't think we'll be encountering any surprises on the equity front, thereby having a rally in the equity market. We think that the companies are sound in Brazil. They will be generating sufficient cash flow, which is very good for the fixed income portion, but I don't think we'll see any surprises on the equity portion.
Okay, well, let's talk about the equity side here, and let's talk individual names. What are your favorite companies right now?
What we favor across Latin America is the deficit that Latin America has, or the need that it has for infrastructure, so home building and infrastructure, the deficit that there is as far as telecommunication companies, and the large portion of the population that does not have access to financial services. So in summary, we would have infrastructure, home building, financial services, and the population of Latin America is, by Latin America I mean everything from Mexico all the way down to Argentina, is 600 million people. That's twice the size of the US. And that's a very interesting internal market for the consumer staple segment as well.
Okay, so you've talked about the sectors that you like, but what about specific company names?
Specific company names in Mexico, since we do favor the equity space there, we would have Cemex, ticker is CX.
The cement company?
The cement company is the third largest cement company in the world. You need cement and you need aggregates in order to start building an entire region. It's at the base of any home, or it's in the base of any civil engineering project. By the same token, we favor Homex, HXM, which is in the home building. They are addressing the significant deficit that exists in the housing market for Mexico and the region as well. We favor ICA, ICA is the ticker. They're more into civil construction, civil infrastructure. We favor América Móvil for the telecommunications space. They have very aggressive expansion plans entering the Brazilian market and the Argentinian market as well. And we also favor Banorte, which is one of the only financial companies in Mexico that is owned 100% by Mexican by Mexican shareholders.
And what's the ticker on that?
BANOR.
Okay, and that trades domestically in the U.S.?
That one trades locally or in the Mexican market, and the reason I mention it is because going back to your first point about being on the ground, you also see opportunities that are not, that you might find locally via the domestic exchanges. So you would have to focus whenever you see an investment opportunity or have an investment thesis at two levels: the larger companies that trade in via ADRs or in international markets, and also consider the domestic market.
All right, let's talk about the fixed income side here. What's interesting to me about many countries in Latin America is the government bonds are actually now investment grade rating. Kind of a flip-flop from what we're seeing in Europe, where we're seeing that some of these ratings agencies downgrade government debt to below investment grade or put on negative watch. Are you finding opportunities in government bonds in Latin America, or are you looking more to the corporate side? We
favor corporate bonds in Latin America, and what you say is absolutely right. Unlike what's happening in Europe or what has happened in the U.S. towards the middle of last year, where downgrade was the predominant word whenever you saw credit rating reviews, Latin America has gone through credit upgrades, and that has brought the prices higher, which is very interesting from a capital appreciation on bond holdings that you have, but also traditionally Latin American countries have paid a very high interest rate on their fixed income, so you can still find very good opportunities there. If you look at Brazil, going back to Brazil and considering their base rate, the Selic rate at 9.75, that's a very high hurdle to overcome. And if you invest in fixed income of microfinance institutions, whether they be in Mexico, whether they be in Colombia, or whether they be in Peru, they also carry a very high cost of financing, and therefore their cost of funding is very high, and that may be a very good investment opportunity as well.
Heiner Skaliks, Portfolio Manager for the Strategic Latin American Fund. Thank you so much for coming on my program.
Thank you for having me, Jennifer.